we ready?
And welcome back for another episode of Staying on Point Market Watch. This is David here from Digital Sucker Punch, and making my commitment to create these videos. Excuse the mess. Listen, I've just jumped off a Peloton session. I wanted to be committed to this and doing it. So no matter what state I'm in, I'm here doing this. You can see I've got the bike, got the infrared sauna in the background. So about to hit that next, but going to get this video done. So listen, I want to change things up a little bit from our usual e-commerce supplement style brands that we look at and what we sort of investigate within the market, and go to one of these big brands that we see. And, Manscaped is, it's a force to be reckoned with. I'm on their site right now. I haven't jumped on this site for a long time. I can see now they're doing some sort of, deal with Pete Davidson. Obviously, that's a really big way to start expanding your reach and expanding your market, is to align with, celebrities, athletes, personnels, influencer marketing, if you will. So Manscaped, if you don't know, guys, is a brand that sells lifestyle products for men. It started off just as clippers for the downstairs region, and they've expanded their product ranges to all types of, all areas of the body, I should say, specifically for men. And reason why I wanted to dive into this brand specifically is because they started off in the e-commerce space. And this is where it's relative to all of you guys. We start off in the e-commerce space, bringing a product to market, and they've exploded. And I wanted to sort of give you guys an insight into what the big guys are doing, and also give you some understanding not to beat yourself up if your brand doesn't hit it out of the park straight away. And and the reason why I'm saying this is that when we partner up with brands, particularly at Digital Sucker Punch within the agency, a lot of them come to us and say we need to be profitable from day one. But the landscape's shifted and changed a lot, and it's very challenging to be profitable from day one, particularly when you're thinking about the increased cost of acquisition, so through your marketing channels, and increase logistic costs, shipping, all that sort of stuff. There's a lot of things that come into play, and it becomes challenging to be profitable from day one, or profitable from year 2, 3, as you'll soon see with this brand. But check out their website. I'm on the AU website, manscaped.com. Great products, great looking site. The funny thing is they still take into consideration the principles of best practices when it comes to conversion rate optimization. You're jumping on the site here. There's a single hero banner, as you always hear me preach. There's their value proposition, what they're trying to present, clear, front and center, meet the new face of Manscaped, and a call to action, where to shop next. It's not confusing. You know exactly what it's about. You know where to go next. And then you scroll down. Then you've got your sort of stacked conversion elements and all the other parts that really sell the product. Like, this is phenomenal. How nice does that look? But anyway, check out this site. I'm not going to go into all their marketing activities in this particular video. You can do that on your own. I think you've seen from previous videos, how I go about that. But what I do want to check out is the Manscaped reports from their fourth quarter, full year of 2021 financial results. So I'm going to read a little bit to you, so bear with me. It might be a little bit dry, but stay here. So San Diego, Business Wire, Manscaped, or the company, is a leading global consumer lifestyle brand specializing in men's grooming and self-care. Today announced financial results for its fourth quarter and fiscal year ended December 31, 2021. In addition, Manscaped has updated its full year 2022 financial outlook. So basically what it's saying is that they're providing us their financials from 2021 and they're providing us an outlook for 2022. But there's some interesting points here, but I'll continue to read. Certain of Manscaped's financial results discussed below may be found in the registered, but I don't need to go into that. This is from their founder and CEO. We are pleased with our strong fourth quarter results, closing out a transformational 2021 for our company. In just 12 months, we expanded our international footprint to 5 continents, renewed with key marketing partners like the UFC, introduced the 4th generation of our lawn mower trimmer, and innovated well beyond the groined region with the launch of our ultra-premium collection of head-to-toe grooming products, said Paul Tran, founder and chief executive officer of Manscaped. The year culminated in an important milestone for the brand with our announcement to go public, so they've recently gone public, through our proposed business combinations with Bright Light Acquisition Corp. More than ever, we believe that our core value proposition of delivering compelling men's self-care routine across the body continues to resonate with customers on a global omni-channel basis and positions us to create long-term value for our shareholders as we transition to being a public company. So a couple of things there, and I'm not going to dive straight into or get bogged down in the technical jargon, but what it's related to e-commerce is that, this brand, just like any small brand, needs to be omni-channel. We need to be all places, all times to touch and have those touch points with your consumer base. So let's dive into some of the fourth quarter year 2021. So remember, this is just the last quarter of 2021. Net sales of fourth quarter 2021 was $84.9 million. So it's an increase of 17.1% compared to the previous year's fourth quarter. International sales increased by 51.8%. Marketplace net sales increased by 42.9%. Gross profit in the fourth quarter of 21 was $37.2 million. So gross profit, fourth quarter 21. Net loss in the fourth quarter of 2021 was $52.3 million. You do the numbers there. It's pretty wild. And when you understand that, how a brand comes into the marketplace and they're willing to go that far into a loss to acquire market share, to acquire customers, to bump off their competitors, to position themselves in that marketplace to be, the provider of these products and the only go-to choice. This is what, brands are willing to do. And then, they've raised money and they'll do all that sort of stuff to put themselves into this position to allow them to be at that loss. But the long-term goal here is obviously, as they acquire customers and that gets momentum, that's going to eventually turn into a profit. But I want to continue. Full year 2020 financial highlights. Net sales in 2021 were $297.2 million. Not bad, brand. Gross profit in 2021 was $143.9 million. Fantastic. Net loss in 2021 was $315.5 million. Oosh. Again, for you and I, that just sounds like incomprehensible numbers, but this is what the big brands are having to do and willing to do to solidify themselves as a legacy brand and, basically get a massive exit at the end of the day once the tables turn and they start to work into their profit. Here's things that are a little bit more applicable to us being the small fry and, from an e-commerce perspective. Full year 2021 business highlights. So average order value, which includes the direct-to-consumer marketplace channels and excludes retails, was $45.08 in 2021 compared to $45.40 in 2020. So it took a bit of a hit in the AOV, but I think that's because they've got one core product. Nonetheless, you would imagine that they would try to have upsells and things like that to bump up that AOV. As I always preach, you want a minimum AOV of $80 to allow you to be profitable with marketing on the platforms that we utilize. And that's typically, Facebook, Meta, Instagram, Google, TikTok. The slight decline in AOV was largely due to higher proportion of orders from repeat and subscription customers at lower AOVs. You typically give a 10% discount if you want people to sign up, but they're committed and you can do a better outlook if you know your churn rate of what income you're coming in. So it's a bit of a trade-off. And was partially offset by the growth in marketplace channel, which drives a higher AOV. Active customers, which includes unique customers that have made purchases through direct-to-consumer channels, were 2.4 million in 21, an increase of 30.6% compared to 1.8 million in 2022. So they're definitely taking market share, which is exactly what they want, why they're happy or willing to have a loss. Advertising as a percentage of net sales was 34.3% in 2021 compared to 39.2 in 2020. So this is really important because as your brand starts to grow, when you're looking at advertising costs as a percentage of your overall revenue, and my apologies as the sun comes in through this beautiful sunroom that we've created as an office here, it's starting to give me a halo effect. But when we're looking at an advertising cost in terms of a percentage of revenue for your overall, if we're looking at advertising costs as a percentage of your overall revenue, 30% is that sweet spot for an e-commerce brand. So keep that in mind, guys. If you're spending more than that, that's fine, but that's got to be part of your strategy in terms of spending more reach, acquiring customers, stealing market share. But if you're wanting to fall into that profitable range, keeping your advertising cost at 30% of your overall revenue and below is that sweet spot, providing that there's margins in your products. We need to break things back down. If you've got 3 to 5 times within your products, meaning that your cost of goods, you can sell your product at 3 to 5 times of your cost of goods. That allows you enough margins to then allow for you to have a 30% spend on your advertising. Now, if you're spending less than that, that gives you more opportunity to spend more and try and push things a little bit harder. If you're spending more than that, you might find that you run out quickly. Your runway of cash runs out quickly. So you need to start looking at ways to reduce that. Other marketing efforts, become more effort into organic marketing, or see where you can squeeze money out from other areas. Maybe negotiate with your suppliers, reduce your shippings rather than using DHL air freight. Use UPS, which is a quarter of the cost, takes double the time, but you need to really cycle and plan your ordering cycle a little bit better. So listen, I want to keep this video short and sweet, but Manscaped, a big brand. I'm sure you guys have seen them everywhere. Quite interesting to see their numbers and give you insight into what the big brands do and how they operate, compared to us small fries in the e-com world. But I hope you enjoyed this. If you want to see more stuff like this, let us know. Comment wherever you can. Send us a DM. Reach out to us. We're happy to help and enjoy your journeys. Bye-bye.